long in Kiwi dollar and short in dollar CAD. I'll walk you through what I have trading starting top down here on Kiwi dollar. So here on the daily chart, you can see yesterday's candle is here, yesterday's daily candle, and then the day before candle here. The correlation here is there is a sweep of the day before low and then a close inside of the day before candle. So this for me gives me a buy side draw on liquidity. So looking for a long position in Kiwi dollar here off of the daily chart. And if we come down here to the 1 hour chart, we'll see price action here. Consolidate here and then deliver to the sell side. When it delivers to the sell side here, it sweeps out liquidity here and then starts to redeliver here to the buy side. So here on the 1 hour, there is a swing low here. This candle here during the Asian session sweeps out the sell side liquidity, actually the candle before, and then this candle cuts in deeper here into this area of liquidity that's resting, this sell side liquidity that was resting here below this swing low that was rated in this series of candles here. And then price began to deliver here back to the buy side. And when I took an entry here off of the 5 minute, go into some detail here. So this was during the Asian kill zone. You can see price delivering here to the sell side, putting in lower highs and lower lows here. And then you can see the shift here. I'm going to bring this over. So you can see the price action, sell side here, lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher high. You get this shift here, higher low, higher high, higher low. And then you get this higher high coming in, higher low. And leading up to this current higher high here. And then for a profit target here on the daily chart, I am currently targeting yesterday's candle high. I could also target the rebalance point of this bearish fair value gap. So with this, seeing price action sweep out sell side liquidity here, from an external standpoint, wanting to see the potential for an internal range liquidity to be swept, since this external range liquidity was swept. If this were a swing low, I would more likely target this area, but it seems like the current daily candle, if it does hold, would be the swing low. If the next day candle here trades above or the low of this candle, let's say for Monday, is above today's candle here, which is Friday's candle, but could target the low end of this internal range liquidity or the high end. I'm just going to target the low end, since I typically just target the previous day's high or low, depending on which direction that the trade is in. And then you can see my take profit, as I mentioned, the high of yesterday's candle here at 0.59898 here on Kiwi dollar. And then you can see my stop loss here is 0.59358 and the entry 0.59430 here. And then you can see the trade here on the 1 hour chart. And then I'll head over to dollar CAD. So dollar CAD also set up during the Asian session. I'll walk you through this top down. So here on the daily chart, we get this price action from yesterday here, and then the day before yesterday. So the price action from the day before yesterday puts in a high, and yesterday's candle trades above the high but closes inside or closes below the day before yesterday high. So this would give me a sell side draw on liquidity, and I would be looking for short positions. And then here off of the 1 hour chart, structure here based off of this Fibonacci retracement tool that I've set up here. This is my dealing range, and this is structurally a short. And you can see price here during the Asian session sweep out this buy side liquidity here, and then begin to deliver here to the sell side. Price trades through this first fair value gap here. Looks like putting in a balanced price range here, a BPR, and then price trades into this lower bullish fair value gap or buy side imbalance, sell side inefficiency, has a reaction here, and then returns to the buy side. On that return to the buy side, price comes back to test this area here where the Asian session was swept here. There's also liquidity above this candle here. Price swept that out here, swept out this buy side liquidity below this swing high, respected the swing high here set during the Asian session, and has begun to deliver here to the sell side, and is now testing the swing low from New York midnight and the swing low here from just before the or the swing low here during the London session. So the London, right now price approaching the London low, which is right here. So there's going to be sell side liquidity resting here below the London low that price can target. This is after this buy side delivery above this candle here was swept out of the market. And then here on the 5-minute chart, you can see price action here coming into the Asian session, putting in a high, a higher low, a higher high, a lower high, a higher high, higher low, equal high, higher low, higher high, then a lower low. So here you get a market structure shift here on the 5-minute chart, and then a lower high, lower low, lower high, lower low, higher high, lower low, lower high, lower low, consolidation here, lower high, lower low, and then higher high. So you get this market structure shift here to the buy side, and then you get a low, and you get this consolidation here, and now you're getting further delivery here to the sell side now that it looks like here you get a market structure shift here to the sell side. So seeing a return to sell side delivery, also seeing price here potentially consolidating again in this area. But this level here that price returned to, and I was able to get an entry off of, this is the change in a state of delivery level here. So this would make this green candle here my bearish order block here, and then I would anticipate price to respect that, and so far price has respected that level. You can see price consolidating down here after trading into this area here where liquidity has already been swept out previously. So I would anticipate price to continue, or a higher probability for price to continue to the sell side here. Also during the Asian session, the Aussie dollar set up. And I've got an order out, but I'm going to cancel this order because price has just continued to run, and I don't believe that I'm going to get an opportunity for an entry here. So I'm going to cancel this order, but you can see here from top down, this one's set up much like Kiwi dollar here, with price action here being to the buy side with yesterday's candle trading below the previous day's candle with a wick, and then closing inside of the range of the day before candle. So this would give me a long bias or a buy side draw on liquidity here for Aussie dollar. And then on the 1 hour chart, you can see this is the Fibonacci dealing range here for the Asian session. And price action was bearish, and then price traded below this swing low here on the 1 hour chart, which is also in correlation with the low of the previous day. And then price traded below that and then began to deliver to the buy side here. When that happened, price came very, very close to giving me an entry here during the Asian session, but price fell just shy here of the ask, tripping me in here to the limit order. So price on the bid came back to the level, but failed on the offer, so I was never able to enter the position. And then you can see price has just continually here delivered to the buy side. Usually I would anticipate price to pull back and provide an entry opportunity by the following session, which is what dollar CAD did in this situation. Where Kiwi dollar set up and gave an entry in the Asian session. Dollar CAD set up in the Asian session but gave an entry during the London session. So right now, looking at price action, the potential for an entry here would be during the New York AM session. But if price came all the way back down here, I would anticipate for this to fail as price. This would be, if we look on the 1 hour chart here, the equilibrium of this trade would be about here, somewhere in this area. So price has already traded above the equilibrium, a halfway mark to target. With that being in mind, I wouldn't want to see price return back to an entry level, or else I would anticipate price to fail after trading above the equilibrium level for the trade. So for that reason, I'm going to cancel my position. That way I don't have an order just sitting out here that could get triggered when price comes back the other way at some point in time. See price pulling back here a bit on these long positions. So it'll be interesting to see how price plays out here moving forward. But so far so good in the positions that I did gain entry into, psychologically wanting to be in all the positions and winning in all the positions, but being able to get entry on 2 out of 3 positions during the Asian session, I'll take that. So far during the London session, there's been nothing new that I've seen that set up, so it seems like the Asian session set up the London session for today, even though there was some high impact news today during London here at the open. But I'm going to let price action play out here as price is trading in my direction overall in both of these positions, and we'll see if take profit can be met here before the close of the trading day and week here for the Forex markets. If you'd like to know more, visit us at ontilttrading.com. Stay on tilt.